What's up, everybody? Chris over here, founder Pollinate Trading. Today, well, we're doing the weekly market overview, but I am going to talk to you about Tulip Mania to get going. First, please hit that like button, subscribe to the channel, send this off to a frenemy of yours, somebody, I don't know, you want to make crazy. Anyway, let's get going. So, weekly market overview. Pretty much, I cover maybe some things in the last week or so, but more importantly, I want to see what's going on in the future. So we're not really reliving the past here so much as reliving the future. And I say that as we start talking about the Tulip Mania bubble, reliving the past, literally 400 years ago. But this is something that everybody talks about, quotes, and snarkily discusses when they talk about a market bubble. So in this week's market overview, I kind of highlighted this book by Charles McKay is his name. I forgot that one for a second. Extraordinary Popular Delusions and the Madness of Crowds. This is a great book. It was written about three big mega bubbles at the time. It was written in 1841, so 20 years before the U.S. Civil War. Probably, so would that have been about 70 years after about 70 years after the U.S. the American Revolution. But before the 60 years before the American Revolution and after the American Revolution and 2 decades prior to the U.S. Civil War. So we're kind of in this period of, yes, there's these, it's an economic boom, basically, in between war years. This typically happens where big wars happen, and then you break down all of society, you build up, and then as the saying goes, strong men build, weak men build strong societies build, strong times build weak men build weak economies. I don't know, whatever. But you get to a point where it becomes quite fragile. So the point of, I decided to focus on the Tulip Mania one because it's the most noted. He talks about two bubbles in the book. Tulip Mania. He also talks about, so he's Steve Law was his name. There's a Mississippi bubble prior to this, and then there was, of course, the some sort of like South India. I don't even know what it's called now. Let me see here. It is, I have it sitting here, the third one. It was, John Law's Mississippi scheme, the South Sea bubble, and Tulip Mania. Tulip Mania was a big one. So what a lot of people, the reason I brought it up is everybody's constantly trying to like call a market top that, this is something that's gone longer than, any other mania in history and blah, blah, blah. What I want to point out here was that so this bubble peaked at 16 February, I think, of 1636. Tulips started trading as a product almost 100 years prior. And it wasn't until 1620, so 17 years prior to the bubble peaking, that the futures market was actually introduced to tulips. And we all know a good tulip market exploration or speculation on futures is just the funnest. We love our futures. Leverage is great. So at the peak, at this point right here, the tippity tip top, one tulip was trading somewhere between 1.5 and 3 million US dollars in today's terms. So one tulip bulb, and if you go to a flower shop, a grocery store, wander through a neighborhood, almost anywhere probably, you'll see a tulip. And I don't know, $5-10 for a tulip. But 400 years ago, those things were worth millions of dollars in the equivalent, spending power of today. A house, literally the cost of a house, a very really nice house, by the way, was one tulip bulb. And then it came crashing down and everybody just got rid of it. The thing that made the tulip bulb interesting is it was originally discovered and a show of wealth in from the 1500s into the 1600 early 1600s. So if you had a tulip in your house, let's say, or planted somewhere, think about the security that you had to have with this product. Anyway, so the whole point of this is when you're in the middle of a frenzy, it's weird, right? Because if you're watching this video, if you're reading the emails, if you're following me on Twitter at Chris D Macro, you're obviously brilliant. You know what's going on. You're involved in markets, and so you're not too worried about understanding what something might mean if it comes to market. Whereas if you're living in your parents' basement, playing video games and stuff like that, well, you're probably underprepared for such a thing. Well, what happens if that same person who living in their parents' basement playing video games suddenly moves onto their yacht? I know stories of folks who have done this. My friend Scott has a couple of friends that he suddenly was like, wait, why are these guys? These guys are losers. And now they own a super yacht. Think about how that perspective shapes you. Think about during the dot-com bubble. Think about during the crypto NFTs, post, the money printing things in 2020, 2021. Think about how GameStop, how many people were just who probably had no involvement in the market suddenly became overnight rich. You, intelligent, well-researched investor with good systems and good risk management and all these other things, are seeing somebody over here who you definitely know doesn't know the difference between Dow Jones, NASDAQ, or S&P 500 suddenly buying a super yacht or mega yacht or whatever they're called to live on. And they travel to whatever country they want to travel with staff on the thing. And it's like crazy. So you see that sort of thing. And that starts happening over here. Right. And then, it's not until this point when it's typically when the best, most seasoned, conservative, risk managing, risk adverse investors get on board with the mania that it happens. Okay. Now, what we do is we have systems to keep us in place so that we're not risking enough, and we're not, even if we are buying here, it's not going to destroy us. Whereas the average, season, think about the Tiger Fund. I don't know if you're familiar with that, like Tiger Fund. In like 1999, 2000, a bunch of value investors finally, this is the height of the dot-com bubble, finally gave in and said, okay, we're going to buy the dip in March of 2020. March of 2020 marked the absolute top in the dot-com bull market, and it went down from there. So it took them until, we're talking like world famous hedge fund managers. We're talking like, so the Tiger Fund. We're talking, we're definitely not talking about Warren Buffett. Warren Buffett actually is ironically more similar to the way we trade systematically than, even though he's known for his value investing. It's a systematic approach, and he's not going to take things that he doesn't have an edge in, right? And that's what we do. We don't take the trades we have edge in. So a little bit of a fun history moment to discuss the what's going on. But let's take a look at our current markets, and let's get to the next phase in the weekly market overview, and that's systems positioning and overview. What do I mean by that? What I'm saying is our systems, how are they positioned in the current market environment? Okay. This is actually this is probably one of the best indicators that we have, because we have history of our systems trading and being involved. We can look back hundreds of years of how our systems would have performed on different markets. And first of all, our systems are trend following and momentum. These trend following momentum type systems outperform the market hundreds of years. They are by far the best performing systems out there overall and in the long term. Their edges have, we have data on rice trading from like the 16th century, maybe. There's even momentum or trend on back to Babylon, ancient Babylon records of price market data that we've able to compare our systems to. And that's kind of the cool thing about trend, is it's not fragile. So one of the challenges of trend is, it looks best at the very top. It always looks best at the very top. And like we looked at with the tulip mania, it always looks best at the very top. And that's when things start to get exciting. So the reason I bring that up is we were max positioned. So this would be April of 2024. This is the peak so far of 2024 on the S&P 500 in mid-July. And then this would be the mini crash we had August 5th on S&P 500. So as this period moved up, our positions started to get bigger. We were at 100%, nearly 100% exposure to the market by the time we get up here. And then as things start to come down, we started cutting our positions. Okay. So what does that mean? By this time, this was the last week of July. By that time, we had, I'm sorry, I think it was August 2nd. By August 2nd, which was the Friday before the August 5th crash, we were at about 10% exposure. So let's call it like 100% exposure here, at the peak, and then 10% exposure at the by this point, by here. Okay. So we had already caught from 52 to 56. We'd already caught a big move. Also, we caught the big move from the November lows, October lows, all the way up, trimmed, got back in. So it's like a wave, right? We're getting in and we're trimming and getting in and trimming. And the point is, we're catching the meat, the meat of a move right in here. We give some back for sure by not buying the absolute bottom. And we give some back up in this period right in here by not selling at the exact top. But the point is, we get all of this in the middle, and that creates this nice even curve on the chart. Okay. So as we head into we've already gone from like 100% in 2 weeks to 10% in about 2 weeks time. Okay. So what do you think? What does that tell you? If your systems are suddenly like if they're trend following systems and you're in this nice strong trend and it's been going since, October of 2022 or so, and you're suddenly at like 10%, you're just in a bunch of cash. What does that tell you? That tells you that, either we're going lower, or we overshot our reach, and now it's time to bring it back in. Okay. In either case, That was market generated. That was systems generated information, not just market generated information. That was systems generated information. And so on this day, on Friday, the 2nd of August, knowing that we were in a bunch of cash, that our systems were not getting in, doing anything, it was very simple for me to say, great, let's go ahead and buy very, very cheap puts on the S&P 500 Friday afternoon as we were going into that weekend. There was just fear everywhere. Everybody was scared. We had dollar yen, yen carry trade unwind, and the whole world was about to end. So I bought the puts. We I want to say it's a 800% return over the weekend. So by Monday morning on the open, we basically just I covered half of those puts. And then after a few, an hour or so, I realized, well, they're just buying the heck out of this thing. So let's cover our puts. So, we take a big chunk out of the market and we're in cash. We're just sitting in cash at that point in time. Now, we have rallied it, what is that? A good from the lows to the current highs. We have rallied 10% in 3 weeks, back up to all-time highs. Okay. What do you think what do you think our systems did there? Now, our swing longer term systems, they are now 37%. We have 2 swing systems in equities. One of them is a more tactical momentum-based system. So it gets into these trades right in here, right? These last little kind of like breakouts that happen towards the end. It gets into those, catches those beautifully. Now our other swing system is a lot more kind of just like get in on the, the breakout and ride the move as it gets going. Something like probably like a move like this, gets in here and starts building and building and building and building, and then starts cutting and cutting and cutting. So you catch, not only the longer term move, but then you get this like high beta or alpha, like high leverage. You can buy like really cheap calls up here and get really big moves on the last little bit of those things. And that's kind of what we do. So right now, our momentum system that catches the big stuff at the end is only 22% positioned. Okay. Our longer term system, which catches the big moves, is about 37.5% in. It moved quick. So, we're probably going to bang around in this area and freak people out like it always does every time you get to a new all-time high, and then continue higher. Now I bring that up because for the last couple of weeks, our big swing systems, our nice, calm, relaxing systems aren't doing very much. But then something else has happened, which is kind of cool. This swing system here, this is called the NASDAQ Bobo Long. And I named it Bobo because it's just kind of a simple, doesn't take a lot. It's a really nice edge. And it's just one of those like, oh, we buy on Thursday and we sell on Thursday sort of scenario. It's not exactly the logic. You can obviously see there's things going on here to help guide us. But it generated a signal on August 15th at 67 or so on the T triple Qs, and then sold out up here. A lot of our traders actually sold their positions brilliantly up here, and I told them, stop that. You guys follow your systems. And then this came down. So I had to be like, whatever, you guys are smart. And that's kind of actually, that's the big benefit of the Trading Lab. As you can see what other traders are doing when the signals get sent out, when these auto signals are generated in the lab. And then you see one of our traders like, oh yeah, I'm in, I went in the triple Qs, or I went into TQQQ leveraged, or I went into NASDAQ futures, or I've got broken wing butterflies, or like you can see how people are trading it themselves with their accounts and how they do it. And you can get, you know, some of them are like, hey man, I sold up here, and you know, they quadrupled their money up here, where, you know, mine was a minor win actually due to the velocity of the drawdown here. But over time, this system, um, pretty solid. You know, this is 500 plus trades, about a 45, 50% win rate with a 1.71 profit factor. These drawdowns are 2000% win with a 30% draw. That it's irrelevant. It's just kind of like whatever size you have on it is that. But more importantly, the Sharpe ratio, this is a monthly Sharpe ratio. So 3.4 times 12. So it has a really nice Sharpe ratio. If you annualize it, you know, like 3. It's just a consistent system. It doesn't go short, and it only gets in when, you know, it's in a trend mode. Again, trend is our big friend here. You've heard it a million times. So that was a nice one to deal with while, you know, this would have been the gap down bottom. So we didn't jump in on this with this system or any of our other swing systems, but we do have this gap system. And I've covered this in some videos lately. But what I want to show is this thing has a 77% win rate. This thing has won 21 out of the last 27 trades since June. So really what it is at the end of the trading day, we get a signal or we don't. And, you know, 55.87 on the S&P to 56. So a nice 35, 40 point gain on futures overnight. That's common. The way we trade it, the way I trade it, is I buy these in this environment. I buy these deep out of the money calls. So we're looking at, you know, 15 deltas, 30 delta calls on the market. And let me just pull up a 1 day chart. And you can see we've had gap, 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 gap. Lots of gap ups that were successful. I think in the last 2 weeks, I think we went like 9 for 10, maybe 8 out of 9. Like it's a, you know, 90% win rate. And it just pops in. Last few minutes of the trading day, we get the signal in the lab, boom, the signal's on, buy it. And then we go to sleep. And since we're sitting in these cheap calls, like you risk $100 or $50 a contract or $25 a contract or whatever on SPY. And for example, on Thursday, I bought, find it. I think about 25 cent. Yeah, 25 cent, 26 cent calls. And I sold this at something like $1.90 or something like that per contract. So, you know, 10 contracts, multiply that out. You know, if 10 contracts is $250 and you sell it for $1,000, not bad for a nice little overnight trade. You do, you know, $10,000 and you sell it for 25,000. You know, like you can do the math, or $2,500 and you sell it for 10,000. With such a high win rate and such a small risk, it's such an amazing system. So when we blend that all together with our systems, you know, yeah, we're not in the big trend on the other systems. We're in a more tactical environment, taking advantage of it. So we're building up our war chest that as the trend systems start to fire off, we've got more capital to apply to it each and every time. And that brings me to our crypto system. Now, our crypto system, as far as positioning goes, our crypto system is, let me see, this is a good one. Actually, our crypto system is 67% long right now. This is from the lows of the August 5th lows in crypto. So crypto is basically up anywhere from 20 to 45% by sector in that period of time, and new highs for a lot of the sectors relative to, if we were to like if I'm going to add, let me just add SPY here, and you can see, relative. So SPY, let's say 10%, even the worst of them all, Ethereum is up more than double. Solana is up 5x to what that is. Bitcoin's 4 times higher than S&P. So, the volatility is a little bit higher, but that's risk premium. You pay for that risk. Our systems are 67% long, those markets at the moment, and they are that's what they should be doing. These crypto is so much stronger than the regular markets right now. Okay. And that's kind of the thing. And I'll explain to you, I'll give you a reason here in a minute why I think that's super important. Okay. So we're getting into the macro section of the weekly market overview. This is global liquidity. It only goes back to 2018 in my dashboard here. But we've got, M2 money supply, Europe money supply, Euro money supply, Japan money supply, China money supply, each of them divided by their currencies. So you get an idea of what money's doing. You can see that the last time that we had a similar sort of breakout was right into the spring, summer of 2020. Well, not even that. Right into the end of 2019, actually, is when it really started to kick off. Then the money printing went berserk. And we are in a similar sort of layout right now. Now, I'm not trying to do price action on or technical analysis on money supply around the world. This should just keep going higher as long as there's nothing back in the currencies and they're just, printing money to pay bills. But every time that happens, when liquidity is introduced into the system, there's more money. So the costs of things go up and people buy things because the cost is going up and that causes it to go up and everybody's got money sloshing around. You got to ask yourself right now, why is the cost of gas at the tank a lot lower right now than it was when there was no, when the Suez Canal was functioning fine, when all the oil in that region was able to travel through the Suez Canal, shortcutting days of ocean transport without the risk of getting shot by missiles, without a war in Ukraine, without the threat of war in the Middle East with Iran and Israel and everybody else in the neighborhood. With all those things happening, how is it that oil is so much lower today than it was 2 years ago? Probably has something to do with elections and an incumbent being able to keep the price of oil down during the election season means some of the people who normally would be like, we need a change in Washington, if their only concern is like, things aren't that bad and well, whatever, I don't pay attention to politics and, it's kind of nice not paying $150 for a tank of gas. And I only have to pay 100 now. This is not bad. There's people that will vote just based on that alone. And so it's interesting to see the cost of oil being down, relative to what the rest of the world or other times in history, it's not that bad. So that's an example of how governments are influencing as we come into an election season with an incumbent who has a nut. So in the United States, you run every 4 years, but the max you can stay is 8 years in the Oval Office, the president. In essence, the same regime is looking at staying in office is kind of the way it's being looked at. And so the vice president right now is running. And so the ability to manipulate financial markets by having your Treasury Secretary and Chairman of the Federal Reserve, who are appointed by you and approved by Congress, you tell them, hey, we need you to do certain things. Well, the rest of the world has started. About half the countries around the globe have started to cut interest rates or provided liquidity in the market in other ways. The United States has provided liquidity into the markets in other ways so far. But on Friday, today is Saturday, yesterday, Jerome Powell, the chair, the Fed chair, said, yep, we're going to start cutting rates in September. So it's August 24th now. September is a few days away. They're going to start cutting rates. And as they cut rates, that's going to continue to provide looser financial, economic environment, especially as we head into an election season. So maybe homes start going up for sale, and there's a bit of a frenzy in that. You're going to see interest rates drop on mortgages. You're going to see rates drop in a lot of places. And so that should stir business activity. You can borrow money to do business, right? So that's the environment we're sitting right now. Now, the only reason I bring that up, and I'm only LARPing, live action role playing, a macro analyst here. I just pay attention to it when it happens. Okay. When it starts to happen is when things get, when there's big moves, that's when you really got to concern yourself. So this is the bottom of the equity market here, would have been November of 2022. This is the bottom of that bear market in 2022. This is the banking bailout that happened. And then this would have been November 2023. Remember earlier where we looked at this bottoming here? This is when that last spike right here is when that last spike in liquidity, this spike in liquidity up. This was the last drop in the markets. November 2023, we reverse, and we've been sending straight up ever since right here. Guess what else has been sending straight since that period of time? Right here. You see where Bitcoin, this is where the big parabolic move from 30 to 75, almost 1,000, basically 30,000 to 75,000 happened right at that same time that they started printing money. Okay. So when the thrust happens, it causes other thrusts, and then it thrusts up, and then we spend 9 months or so kind of going sideways. Right? This is about March to August. So, this period of just going sideways. And so with this new thrust higher, crypto is by far the best beneficiary of by far the best beneficiary of looser financial conditions. It's where you see it almost immediately, and you see it overshoot. So we've already seen it take off. And one final thing to note here that's interesting is Friday, yesterday. What is this jump? What was that jump? Why was that? Why did that happen in crypto? Why did we go from 33% to 48% in memes? Why did Bitcoin go from 17 to 25% in one trading day? Why did it happen there? And why didn't it happen in this? This is the Jerome Powell speech 1 minute chart. That just went sideways. Right. But what did it do in crypto? Where is it at? It took off. Bitcoin adds another from that period. From that period to where 18% to 7% in one day on Bitcoin. Solana goes 13% since then. And then, of course, the higher leveraged meme coins, DeFi, IoT, whatever, like all the different other categories have put in massive returns. So, look at that's that one. Let's do 22 to, can't see, I'm colorblind here. So 8%, These were already probably pumping just to pump. But when money comes in, I think there was a little bit of probably advanced guessing of what was going to happen by the crypto markets. The reason it's so interesting to watch those is because the crypto markets, again, like I say, they react. So this Bitcoin move, that was from 60,000 to 65,000, almost a 10% move to peak. On a day where regular markets, S&P 500 and everything else just went sideways. Okay. So crypto is the biggest beneficiary of this type of Federal Reserve and monetary policy, fiscal and monetary policy of central banks around the world. This is the biggest beneficiary of that. Now, it's not like the world's ending for the S&P 500. What we can see here is that this little thing down here, this is a wonderful breadth indicator for the S&P 500. When this thing gets down into this shaded area, you can see that for the last, let's say for the last 25 years, anytime it gets down into this area is a great buying opportunity. There's only been a few times where it's actually broken below it, and that has proven to be one of the biggest bottoming opportunities in quite some time. This was November 2022. Boink. This was March of 2020, which had already started, but you can see that things just, this is not normal right here, right? That one is, this is, everything else is just kind of this nice straight up do. This was just like boom, boom, boom. That's huge printing right here. But these big thrusts are super important to watch too. And this is our next latest big thrust. And, we've had it in 2011. We don't have the money printing charts all the way back into these timeframes, but you can clearly see that anytime you get down into here, here, this is global financial crisis. You catch a position where this is the bottom right here to buy. This is the bottom. Everywhere from these bottom areas tends to be a rip higher. We haven't been, the last time we were this low was October 2023. Here, right? This thrust up. And then here's our next one. Okay. So we've got confluence of buy signals across the board. We know that equity markets are going to participate in this, and this was an excellent buying opportunity when we got into here on August 5th, even still, because you can look back in history every time we get into that area that the rally lasts, and it lasts quite some time. So we can see that this thing is probably going to be sending a lot of new, a lot of higher prices. I believe crypto is probably the biggest beneficiary of it. So when the markets were crashing, back in on August 5th, what we did in the trading lab is we were aware that the money printing had started. So it had already started over here, right? We already knew that it was up at levels and it was starting to rise. We knew that was happening. And we knew that there was opportunity with these low volume nodes right here to break down to those levels. So our systems had not had us in any crypto for a while. We were just sitting crypto cash, just piles of money sitting in our crypto accounts, doing nothing, but making people angry. People thinking, oh, cashing out their crypto accounts, moving on, doing everything. But what we did, some of us did this, not everybody, but this was the signal we called out. This is what we said in the lab. It says, go ahead and put buy orders at 53,000 and at 50,000. If they don't get hit, no worries. We'll come back and we'll trade the momentum as we should. But if we get lucky, we can get these orders in, and that should solve everything. Not everything, but that should get us in really early. And so we put these orders in, and we're already up, over 64,000. So if we bought the 50,000, you're up 14,000. If you bought 53,000, you're up 11,000. We had the same thing on Solana. We bought Solana at 120. Solana is currently at like 160, 165, outperforming. So let me pull that guy up. You can see Solana is up 31%. Bitcoin's only up 21% from that period that we went in to buy. Okay, so we've really done good. And our crypto system has our momentum system, the flagship, the greatest of the great of our systems, has not fired a buy signal on crypto since it got out of that massive run back in March, April timeframe. Remember, we catch this stuff and we leave all this for other people to fight about. Until this stuff starts happening, we're not interested. We got lucky over here. Maybe, maybe that'll be the best buying opportunity we've had in forever. And maybe we were great at it. Congratulations. Yay us. And so what we're looking to do here is when it starts kicking off, we should see, maybe a move like this, which was the October to January run, or the February to March run, which was even steeper. We have a lot of opportunity for that to happen. We have a lot of, trying to find, if I can find the, here it is. Let me run this code real quick and update our analog. Nope, we're going to install. Oh, we do got it. Okay, so this is the analog for Bitcoin after post-halving. Okay, so this would have been the 2019 halving. I think that's blue. The yellow is the 2016 halving. Okay, and then the white is the 2024 halving, where we currently make sure we don't have there's nothing blocking it. So it doesn't stop. Okay, so as you can see, the 2019 halving caused the 2020 rally, 2021 to the peak. This 2016 didn't really start to kick off until 2017. This would have been a peak in Bitcoin after that, and then that's when the real move started happening. So we're heading to a place where we should start seeing the analog. We should start seeing new highs in Bitcoin, some volatility. My guess is we hit the $100,000 price level and it gets volatile. But as that kind of dies out and goes sideways for a bit, the alt markets should continue to pump. Vice versa, maybe alts lead and then Bitcoin comes in. But the point being is, if we look at the time frames after a halving, typically we start seeing these highs get seen, which we saw right here, right? This sideways area. This is a lot longer. We should really start to see higher prices from here using our analog. So that's what I'm looking at right now. This is what I'm, that's how I'm trading it. We're looking for a fairly big move higher in crypto. We've already got follow through from Friday. It is a weekend in crypto, so who knows how that's going to play out. But that's what we got. Okay. Be sure to like and subscribe. Stay in touch. Share this with your, frenemies. Subscribe to the lab, or join us in the lab, and you can trade this right along with us. Love you all. Bye.